Hey guys, Chuck Barone, Casual Friday, July the 15th, 2022. And welcome to the show today. We have a lot of interesting stuff to go over today. Before we start, I just want to thank everybody again for for participating in the channel, for watching the videos, sharing them with your friends, all of your comments and likes. We're really grateful for your guys' really amazing amount of participation. It's pretty exciting. We're grateful. We got a lot of stuff to do today. I want to spend some time at the end of the show talking about silver today, so don't hang up too quick today, guys. The end of the show is going to be what you're here for. Going over the market briefly today, the stock market had a big day today, a big rally in stocks. Stocks up across the board. Everybody happy in the stock market today. I'm starting to believe this is kind of a sucker's rally here, guys. There's no doubt that this recession is here. There's no doubt that these earnings are going to go down. Play stocks at your own risk here, my friends. In the bond market, the 10-year settling at about 10.93%, holding steady there. Incredibly low in the face of what's real in the world. You got the Fed overnight rate sitting at around 1.6%. You got a 10-year rate at 2.9%. That's a pretty narrow spread for that length of time. The yield curve is still inverted, although the 30-year today, the yield rising back up above the 10-year yield, kind of renormalizing that with the 30-year at 3.02 and the 2-year at 3.12. So it's kind of like the yield curve kind of goes, and then there's the down to the 10, and then there's back up to the 30. It's an odd-looking yield curve. It's telling us this recession is coming. The dollar today still the king of the hill, down fractionally, but still well over a 108 on the dollar index. Now, when I say the dollar strong, I'm only saying comparatively against the world's other currencies, not relatively like it is at the grocery store. Metals had a tough day today, down again. Silver settling at 1706. Or I'm sorry, gold at 1706. Silver at about 1877. Strong dollar weighing on metals. And while the dollar remains at these elevated levels, guys, it's going to be really difficult for metals to rally. The oil market, however, did have a big day today. West Texas crude back up to about 97.50 per barrel. Natural gas really rallying over 8% today. It's kind of been gyrating, but the trend is certainly up on natural gas. I think the Russian threat to our friends in Europe, a big cause of that. Keep your eyes on oil and natural gas. I think we got still room to rally in these. Bitcoin had a decent day today again, settling over 21,000. It's in that trough I've been talking about, with a bottom of about 18.5, a top of around 22. It's been gyrating in this trough. Let's see if it breaks out either way. That'll give us some direction on where Bitcoin's going in the short term. Important news you guys need to know today. The ECB, the European Central Bank, came out today, and this is a great one. They said that they would provide unlimited support for the debt market, meaning they're going to be printing cash like crazy. They're going to be buying debt in the ECB and probably here in the U.S. Treasury as well. They're going to artificially keep their rates down, which will suppress the euro. I think that the ECB's plan is going to be short-lived, guys. They're going to have some difficulty because with that kind of support, it's going to be very difficult for them to rein in inflation in any meaningful way. In the meantime, our friends, the Federal Reserve here, they're having some difficulty with their QT. You know, they had their QE, the qualitative easing, where they were printing money like crazy, buying up bonds and buying up mortgage-backed securities and everything else that was in the market. And now they're trying to get rid of some of that. The amount they bought sitting around $9 trillion. So far they've managed to offload $40 billion, a big number. It's kind of funny though, because that the big stash of bonds they have went down $40 billion, but this balance sheet number over here went up $40 billion. It's really weird. But the reports are that this QT, this qualitative tightening they're doing while they're letting these bonds just expire and not replacing them with new bonds is already causing big liquidity issues for the debt markets here in the United States. So the Fed, they were already in a gigantic pickle trying to play, are they going to fight inflation or support the economy? Now you add this to the mix. I think that it's going to take them until the year 5000 to get rid of $9 trillion that they're holding there. Today in business news, the manufacturing index was down again today for the second consecutive month. It's just another indicator that this recession is here. Manufacturing, what little there is left in this country, not as productive. But the good news for the economy, yay, consumer spending was up, guys. The consumer, the market mover, yay, they're in there spending money. One problem, they're not spending money. They're going further into debt. This debt trap that the vast majority of this country is in just keeps getting bigger. When you hear consumer spending up, how many people are spending real money versus how many people are using the MasterCard or the Visa? Here are some interesting statistics. Consumer debt is now at a record level and getting higher every single month. So during the pandemic, people were paying debt down. That made a quick U-turn right back up and now breaking records again, as well as credit card applications. So people are now not only adding to the debt they already have on existing credit cards or whatever debt vehicle they're using, now they're applying to get more debt and create more debt on new accounts. So it's a hoax, okay? But this is what they want to point to tell you how good everything is, how rosy everything is, to kind of try to keep this whole debt bubble from deflating. It's crazy. Consumer debt at a record high, with rates going up. Pretty soon we're going to see bankruptcies at a record high too, guys. The main crux of today's show, though, I want to talk about silver specifically as an investment. I want to talk about my personal opinion on it, nothing more. And I want to give you guys a little bit of a background on what silver has done and what I think it could do in the future. Now, before I start, I do want to say that I love precious metals. I love gold and silver. I own both. The actual physical metals in my safe, stashed away. I believe that gold and silver are an excellent hedge against comparative weakness in the dollar. So when the dollar starts tanking against other currencies, that's when the value of silver and gold go up. I think that it's a great hedge to have against the dollar going down in value or ultimately a collapse, which a lot of people believe is inevitable. So I want to preface this by saying I've owned gold and silver. I love gold and silver as a hedge against the dollar. But let's talk about some of the downside of investing. And I'm just going to specifically silver today rather than try to make it an hour-long thing with gold is there as well. Now, here, my friends, is a chart of silver for the past, so going back to 1970, okay? I'm not sure if you can see this clearly, but these little gray areas here going down the page, these are recessions, okay? And as you can see, there's two gigantic spikes in silver over the course of the past 50 years. First back here, the Hunt brothers, and then this other one after the recovery from 2000, the big real estate crash, silver had another gigantic spike, okay? So these were your two real opportunities to make big money in silver, okay? So if you're an investor and you're looking for big returns, you've had two real opportunities in the last 50 years to make big gains in silver, okay? Now, you can see silver's had another nice run here. The pandemic, here's the pandemic recession. You can see silver was down and then it's had a big rally back up to about $30, just under $30. And now it's kind of coming back where it's sitting around $17, almost $18 per ounce. Now let's say, okay, looking at this chart, let's say you bought silver right here at the bottom on this rally for $15. And you sold right here at the very top for $28. That's a nice little score. $15 investment, netting you out $28. You know, if you had 1,000 ounces, that's a $13,000 return on a $15,000 investment. Pretty nice. Here's the problem. When you buy silver for $15 an ounce, and that's the spot price, do you actually pay $15 an ounce? No, you don't. At least I don't. I go to the silver dealer and I buy a $15 ounce and he charges me $19 or $20. Usually it's $4 or $5 over the spot price. So now, as soon as you buy it, you're already in the hole there because you got to make, now silver has to go to 20 to get you even, right? Problem. Let's say, okay, so you bought it at 15, you paid 20 for that $15 ounce. Now you sold at the very top at $28, but they're only going to give you $24 or $23, okay? Because they're going to take their juice for the selling too. So when giving you cash for the silver, so they charge you a fee when you buy it, they charge you a fee when you sell it. If they're charging $4 an ounce, well, they just ate up $8 of your $13 profit. It seems to me that the dealers are the guys who are really going to make the money. Now, don't get me wrong. Making $5 profit on a $15 investment is still a great return. It is. It just seems to me like there might be more effective ways to invest for real gains over the long term. Because these rallies, as you can see here, these rallies don't last. They don't tend to last real long. They kind of bounce right back down here. And another thing I'm seeing here is silver does not perform particularly well in a recession. So now, as you can see, it's coming down here. I believe in 2 years, when this chart gets extended out to, say, 2025, there'll be another gray line here for the current recession we're in. So silver is, while it's a great idea as a hedge, it may not be the greatest idea for a long-term investment if you're looking for real gains in your portfolio, okay? I think that, you know, you should have silver in your portfolio, you should have gold in your portfolio, maybe making up somewhere between 5 and 15% of your portfolio. I really wouldn't want to go much heavier than that. These are numbers, guys. This is reality, true numbers, right? Now here, let me show you another chart that's interesting. Here's a chart of the stock market for the same period of time, okay? Now you can see back here up until about 1985 or so, stock market was, you know, I remember stock market had a 20-point move. It was a giant day in the market. This little pocket right here, this is the flash crash in 1987, okay? Here's the 2000 dot-com crash. Here's the big kablooey in 2008, the real estate crash. And here we keep going up to today. This looks like, over the 50-year term, a better way to invest than this does, right? Now, I'm not saying take all your money out of silver and put it into the stock market. I'm not saying you should have a giant exposure to the stock market, depending on how old you are and when you're going to need the funds that are invested. I'm just saying comparatively, it's at least interesting, right? So guys, you know, let's remember what the goal is here, right? The goal is to protect yourself. The goal is to position your portfolio for the best situation according to what's happening in the world. I think that, again, there's a place in your portfolio for gold and silver. I think there's a place in your portfolio for stocks, bonds, and all the rest too. It's all about the timing, as we know. Anyway, hit me up in the comments. Flame me if you have to. I know I'm going to get some of that today. Tell me why I'm wrong. Tell me where I'm off. And we're going to talk about the dollar on another show. And that'll be interesting because we'll talk about the dollar and its relation to precious metals as well. Anyway, that's it for today, guys. I appreciate you spending the time watching the show. Stay tuned over the weekend. We're going to release a special video with just me answering questions because I've been getting so many of them, so many, and they're interesting, good questions that'll help educate you. Look for that video over the weekend. Until then, we'll see you guys on Monday. Thanks.